Global stocks are rebounding after solid gains on Wall Street overnight that ended a three-day slump. The Dow Jones index jumped more than 500 points or 1.6%. The tech-heavy Nasdaq was the biggest winner, climbing 2.4%. For the past 2 weeks, markets have whipsawed due to the coronavirus Omicron variant, and that's eroding gains investors around the world have made over the past year, as economic activity picked up thanks to vaccines and the easing of social distancing rules. All major U.S. benchmarks have surged around a fifth this year. In Europe, the UK's FTSE is up 11% since January, and Germany's DAX has risen 12%. Asian markets have also had a good year, with the exception of Hong Kong's Seng index. It's posted its biggest loss in more than a decade due to China's property crisis and Beijing's crackdown on the tech sector. Now, let's bring in one of our experts. Russ Mould is the investment director at AJ Bell. He joins us now from London. Welcome back to the program, Russ. Now, it's a shortened trading week in the US and Europe, so let's take a look back at the past year. We've seen stocks really rally in 2021. What's driving that optimism? And we know it's not just base effects, because we've seen a lot of major indices reach record highs this year.
Yeah, you've seen records in America, Germany, France, India, to name but four. And I guess there are three main reasons there. The first one is that you've seen vaccinations only just over a year since Pfizer Monday. Secondly, you've seen an economic recovery as lockdowns have eased and vaccines have allowed people to get out and about. And thirdly, governments and central banks have provided a lot of fiscal and monetary support to economies. And by keeping interest rates low, central banks have, to some degree, forced people to look for better returns on their money. And in a lot of cases, that's been in the stock market.
Right. Now, heading into 2022, what are your expectations, given the Fed's promise to raise interest rates as many as 3 times next year, and of course, the threat of the Omicron variant that's still looming over the global economy?
Yeah, I mean, I think there are lots of moving parts here. A lot will depend on Omicron, and it looks to be very transmissible, but whether it's any more dangerous than its predecessors is perhaps the key question. You're still looking at, even if the Federal Reserve does raise interest rates 3 times in 2022, that only takes interest rates to 1%, still very loose monetary policy, looser than perhaps you would expect given a normal economic backdrop looking at the headline statistics. But probably the biggest determinant for markets in 2022 will be whether inflation really does take hold or not. If so, that will leave investors wondering whether they need to pay more attention to real assets like commodities, for example, rather than paper assets like bonds or shares.
Right. Now, Russ, let's take a look at Chinese stocks now. They've been battered this year because, as I mentioned, of the property crisis surrounding Evergrande and, of course, Beijing's crackdown on the tech sector that's hit stocks like Alibaba and Tencent. Should investors expect some relief in 2022?
I mean, China is already easing monetary policy. It's allowed banks to lend more. It's cut a headline interest rate. So I think the authorities there are already looking to try and keep economic growth going. They have a very difficult balancing act. They want to maintain economic growth on one hand, but they don't want the property bubble to continue to expand and on the other. So they probably at some stage face a very difficult choice. But in fact, exactly the same choices America, the United Kingdom, and the European Union. Do they perhaps have to accept a slowdown, a bursting, or at least a deflation of a property bubble in China's case and a stock bubble in the case of the West, maybe? Or on the other hand, do they run monetary policy and fiscal policy very loose and accept inflation and take their pain in another way? So they're probably facing exactly the same decisions as the central banks and governments of key Western economies.
Right. Russ Mould, investment director at AJ Bell in London. Thank you for joining us with your analysis.